It's got many people excited about a potential policy pivot from central banks. Our next guest says commodity prices will likely remain strong for a prolonged period thanks to a dearth of investment over the past decade. So what are the implications for your portfolio, and more importantly, what are the best opportunities out there for investors? Let's get a view from Ox Capital Management's Dr. Joseph Lai, who returns to the show. Joe, good to see you.
Good to see you as well, David.
Let's go start on the energy picture. Of course, and we saw a big rebound in energy prices again last week. Traditional energy, crude, gas and the like, where do you see that evolving? Because as mentioned in the little introduction there hasn't been a lot of new investment in that industry for a long period of time.
Absolutely. So the energy prices we're seeing is a result of improving demand and a structurally undersupplied picture. I mean, some people put the undersupply to be part of the Russian situation, but the reality is a lot of the crude that's Europeans are not buying just simply have gotten diverted. So the overall supply picture has not been impacted significantly as a result of the war over there. It has been a result of, however, last decade of underinvestment in energy and a lot of commodities because of weak prices. So supply is structurally weak. It will take a few years for the supply to come back, and they're not actually even starting to come back yet. Demand, however, is actually improving. As we know, with the opening up of COVID, I mean, everyone's traveling. People are traveling from here to Europe over the holidays and stuff like that. So demand in terms of air travel is continuing to improve. And also China. I mean, this is a situation where energy prices are actually high-ish in the time when China is in lockdown. So as China starts its lockdown reversal in the next quarter or so, I suspect the demand for energy actually improves. So this is actually continuing to add to pressure on energy prices in the second half.
All right, Joseph, we'll get to the China situation towards the end of the chat here, because I want to go and get some names in that traditional energy space at the moment. Through a global lens, what companies do you like at this stage?
Yeah, look, I mean, at Ox, we have looked at a lot of these energy companies globally, and we just picked the best. So the best companies are companies like Shell, which is a very good energy company, the biggest LNG provider in the world, with great ESG record, relatively speaking. And also another European company called Repsol. We also own some sort of smaller US oil companies. They benefit a lot in oil prices. The oil prices are somewhat hedged. So they're not achieving the $110 oil price as we see in the markets. But even on the $70-something oil price, it's generating like a 20% free cash flow yield. And as the hedge book grows, they'll probably get to 30-40% free cash flow.
That's big numbers. And when it comes to actual investment in that space, do you expect there to be any supply response down the line, or do you think that they're quite happy, given that ESG lens as well that's been applied to a lot of investments, will just remain as is?
Yeah, look, I mean, I suspect there is a little bit of change from the ESG perspective. For instance, natural gas is gradually recognized as a transitional fuel. So in a way, it's not such a bad thing from an ESG perspective. But so far, most of the listed public companies, which actually do control a lot of the oil supply globally, are still hesitant to add capacity precisely because of the ESG issue. I suspect that's going to change when the pressure actually gets worse.
In this environment where we have so much concern about energy security out there, and we see people talking about restarting old fossil fuel projects and the like, the alternative investment space in energies. Now, how does that go and fit into the equation right now? Is it going to be a long-term structural bullish story, what's going on right now?
I think so. I mean, there are substitute goods. I mean, even in Australia, we're hearing our neighbors. I've just put in solar myself recently. A lot of people putting in solar and also thinking about electric cars. I think it's all, if energy prices stays high or goes higher, the demand for alternative energy products actually increases as well. So from that perspective, some of the commodities, that's applying the alternative energy space would be, I guess, well bidded for, like, lithium, nickel, in terms of demand. But clearly, one has to do the work to understand the supply as well for these commodities.
Just on those that battery side of the equation, a lot of people are looking to that, obviously, to go and be that nexus point to go and allow for renewables to go and take place. You mentioned what some of those commodities at the moment. Australia's got an absolute abundance of that. From a global perspective, though, if you want to go and look further afield, what can you go and look to when it comes to those names out there that exist around the world? Yeah,
it is quite amazing. So we've looked at various things like nickel and stuff like that, and in the country that's going to benefit significantly from that is Indonesia. So, Indonesia is going to make up almost the entire incremental supply of battery-grade nickel for the next 3 to 5 years. So, So as a result, I mean, the country is seeing record foreign direct investments. The economy is starting to boom after a decade of more or less not doing that much. And so that's going to do well, and we're positioned for that with basically just good companies in that market. Valuation is multi-year lows. It's sort of starting to rebound now. And interestingly, right, year to date, that market is actually up. It's quite interesting, right? I mean, the global market's been so weak. So that's great. And of course, Australia's got great resources in this area, so have a look there as well.
Just in that nickel space in Indonesia, any names can I get prize out of you that you like at the moment?
Well, okay, the story of nickel is a little bit complex. Demand is great. Indonesia will provide it, but they'll provide a lot of it. So I suspect actually nickel prices may actually trend back down to closer to marginal cost. But the beneficiary, however, are actually just the consumer names in Indonesia, some of the property companies which have suffered, and with COVID opening up and consumption improving, the retail malls will actually improve a bit. We did actually own some nickel companies, but we actually been a little bit more cautious.
Okay.